TikTok. There's some news on TikTok, ByteDance, and so there's not a trading chart for this one. I just want to go over a little bit of news on TikTok. But they're talking about doing an IPO later this year, and they've had operations in Hong Kong. And so this is a Chinese company, ByteDance, that owns the trade name TikTok, and they're looking to do an IPO. And so there's no date announced on the IPO. They're just kind of talking about market cap estimations and things like that. But right, Hong Kong. So TikTok is the first big tech giant kind of company to withdraw all operations from Hong Kong because Beijing, mainland China, has rolled out the national security law, which basically makes democracy illegal in Hong Kong, and they're arresting people. And basically, China has basically taken Hong Kong back, and yeah, basically ended the system. But it's going through the Chinese parliament or whatever they call it, and the U.S. is now trying to pass laws against Hong Kong, and it's a big international mess. But as of yet, China is basically ending Hong Kong, and now we have major companies rolling out of Hong Kong, and so I mean, Hong Kong was a big tie to, it's a Western type of state that's connected to mainland China, and it was sort of a bridge between China and the West, and so it's just sort of building tensions between the U.S. and China, and Hong Kong. Yeah, Hong Kong is in trouble, and so yeah, as far as an IPO, like this would IPO, I guess, in mainland China, and there's lots of companies that list, Chinese companies that list on U.S. stock exchanges and things like that. But this is just a whole nother layer of political risk, and now I see companies rolling out of Hong Kong, and this is a big one. And if we see a flood of people moving out of Hong Kong, yeah, Hong Kong could just become almost nothing. So I mean, as you can see, there's no TikTok ticker symbol. I don't know if TikTok is actually supposed to be their ticker or not. But the company is ByteDance, and they may IPO, but they're not going to be operating in Hong Kong. And this is a weird one when they do IPO because yeah, just yeah. But let's take a look at the HSI. This is the Hang Seng. This is the Hong Kong Index, which has been looking a whole lot like, where's Fed? Let's see. It's been looking a whole lot like the U.S. kind of the XLF financial sector, and so it got a big crash. Let's get into like I don't know, like hourly candles. Yeah, so the Hang Seng here, Feb. So this was the crash. It looks pretty similar to the rest of the market crash, and it's had a big rebound here, which is pretty interesting. Yeah, so this is during basically a mainland China takeover of Hong Kong, and the Hang Seng sector, the Hang Seng index, which is mostly financials, yeah, is rebounding, and it's looking way stronger than the like the American XLF sector. Looked very similar to that point, but the XLF is drooping and looking pretty weak, and Hang Seng during a takeover is looking good. It's weird. It's weird. So anyway, that's I just wanted to kind of point out that TikTok is uh, super questionable now, and I don't know if they're going to IPO or how they're going to list after all of this. But that's just another thing to take a look at. I mean, companies that are operating in Hong Kong are in all kinds of. It's just, the political situation is just really difficult right there. And here's HSBC. So HSBC is a bank that is headquartered in London, but it operates in Hong Kong, and so they just dumped and didn't recover at all. And if you go out wider, you can see that they've had just a long-term kind of below. They've been doing poorly since '07 or something, and now down here at long time lows. Yeah, so that's all the companies in Hong Kong are just kind of looking kind of scary. The political situation's looking rough. Um, I did a video looking into the possibility of like an actual war between the U.S. and China, which is not very likely, I don't think. But basically, China, through trading with other people, through developing other currencies right now, can be a major threat to the U.S. financial system, the trade war, all of that. And like militarily, like China is in no position to attack the U.S. or anything like that. But if the U.S. attacked China, they can defend themselves and they can cost the U.S. a ton of money. Basically, a war with China would just accelerate any kind of financial problems that China would be causing to the U.S. It's just yeah, it's a threat on the the dollar as the world reserve currency, which is the big thing that everybody is watching. Like, how's the dollar holding up? And well, this week the dollar's still doing fine. It's just, I mean, here's 2008 crash. The dollar's been in a bullish trend since the 2008 crash, and it's not breaking down right now. And people are saying it's breaking down just because of this last little move down, but it's not really. I mean, it's had a pretty good support line for a long time. But if it does break down into like the 90s or somewhere down here, like that would be something to really seriously look at. But as for now, the dollar is strong, like potentially too strong. Like the U.S. probably wants to weaken the dollar, but it's really difficult because other countries can just print more than the U.S. can, because the U.S. is printing against 70% of the world monetary supply, and the other countries are just printing against their own monetary supply. So it's really easy for them to print if they want, and it's really hard for the U.S. to keep up. Um, yeah, so let's just kind of a look at some political tensions and things like that are going on. And this is still pre-market, so I guess just taking a look at the XLFs kind of being weak and stuff. Let's go out and take a look at our whole chart. We're out on weekly candles here, and so you can see that we're on the borderline between kind of bull and bear, super long-term momentum chart. We're making a bullish move and trying to get up onto the bull side of this chart. So if this is like a 2-year maybe outlook with weekly candlesticks on the momentum. And so if this can make it up into bull territory, that would be a very long-term bullish kind of setup. It hasn't made it yet. But I just wanted to point out where we are on this chart. So this is the bubble model, like all the way back to this 2008 crash. We've had this support line. That's a 12-year support line that we have been above, except a couple of dips, that we got some bear traps here along the long bull run, and then we had the big V reversal in 2018, and then another one here. Now we've popped up again, and so we're above this long-term support here, and we're below this 2-year support here. So we're kind of in between bull and bear territory, and we have high volatility, which means big moves are possible. And I just wanted to point out sort of the volatility range that we have been in since 2019. So January 2019, this is Volmageddon, and this is the 2018 crash. I think I said 2018, right? 2018. Volmageddon is Jan 2018, and this crash is December 2018. So this whole period is where the high volatility started, way before this Feb 20 crash. And it's been going on for a couple of years, and it's been creating this expanding high volatility zone. And this huge crash and huge bounce, like we're just swinging back and forth across the zone some more. And so, I mean, just like dramatically, like, this area, 3,500 or something to the top edge, and a 2,000 to the bottom edge of this volatility zone. If there's a huge move, you can get, I mean, as you can see right here, it's possible to swing all the way across the zone in a month or two. So, I mean, just in the period of a couple months, you could make it all the way down here, all the way up here, which is absolutely insane. And as of right now, we're just kind of stuck in the middle of nowhere still. And we almost got a bullish setup. Let me zoom in a little closer. 15, that's too close. Let's go to hours. Yeah, so we almost got a bullish kind of setup here. And we didn't get support, and now it's broken down. And so now we're just kind of back in the middle of nowhere. So today is more of a bearish setup, but not very strong. And I guess today is just kind of a look when we get into the cash trading to see if it will set up a bearish kind of setup or not. But you know, we had this kind of bullish. We closed bullish on the bullish side of the line. We didn't get support, broke it down, and now we'll see if it closes on the bear side and see if we get resistance here. And if we do get resistance here, there's a lot of room to move down in this territory, down towards, you know, breaking 3,000 this time probably on a downward target. And then on the upside, we have this reversal zone here, which would be a bunch of resistance. And then we have the long-term, the 2-year support line above that. So getting through here on the bullish side is going to be tough. So I would expect bullish moves to be wobbly and fighting and kind of sideways over who knows, a week or two maybe. And then you get towards this major resistance area. That could take several weeks to get, you know, a little bit of bullish movement from here. And the bearish side could just rip. It could rip in a day or two, like way down here, because there's really no support under here until we get down to these moving averages. So that's just kind of a look at some international political drama and where the markets are today. And yeah. So yeah, the talk about the dollar weakening or the dollar losing reserve currency status or any of that stuff is just not, it's not happening right now. The dollar's holding support. If the dollar breaks down, that could be an inflation signal, but let's take a look at the bond spread. Because the huge, you know, inflation, deflation debate, that's just kind of not doing much. Yeah, so it's, I mean, the bonds are the short, you know, the short-term treasury bonds are close to zero. The long-term ones are, you know, a little bit above 1%. They're not, it's pretty weak. It's not trending negative. It's not trending higher. So we're not getting deflation or inflation signals right now. It's just kind of sitting there. So we're not getting signals for much of anything at the moment. And the bullish setup kind of failed. So it's looking like a more of a bearish kind of setup for the next 2 days right now, but not any really strong indicators that would happen. Like, as sometimes the yen will move prior to like the market and it's not doing anything. And then just a big thing to watch this week, like we're not getting liquidity from the Fed right now. The Qs are still just like going, you know, like the NASDAQ and the tech stocks are still just going high, but the small caps and the financials are not following. They're breaking down at the same time. The tech stocks are breaking up. So this is a higher risk. We have high VIX. There's just a bunch of risk right now, but just not much really set up. What's gold doing? And gold is trying to break out. And this isn't the actual gold prices. I'm in the Sprott Physical Fund. Oh, this is a really good episode because I'm talking about Hong Kong. I'm mentioning HSBC. Okay, so GLD, mentioning HSBC. Okay, here's something crazy that's going on right now. The GLD custodian is HSBC. So if you're buying, you know, gold, like paper gold from the GLD fund, you're buying contracts with HSBC, which is operates in Hong Kong, which is under massive political risk being overtaken by China. And they have contracts with the Bank of England for gold vaulted in the Bank of England. And just this week, Venezuela asked for delivery of their gold from Bank of England, and Bank of England refused. So this is the first major refusal of gold delivery. And that makes the gold in England look really risky. And so GLD has a massive amount of risk right now. Counterparty risk, political risk. I've been saying this every time I mention GLD that I do not trust this at all. Paper gold is already kind of sketchy, and you don't really know how much gold is backing, these paper contracts. And this is not investment advice as usual, um, but now, I mean, we have China and Hong Kong and England all political risk, and we have this bank that has an awful balance sheet that, I mean, their stock has been collapsing for years, since like 2007. As the custodian to this gold in England that's already refusing physical delivery of gold to other countries. Like, I mean, how much gold does England even have? How much gold do they have contracts out on? Like, what happens when this bank operating in Hong Kong? Like, I mean, there's so many things that could go wrong with this GLD fund, and like, I won't even touch this thing on like day trading or something like that. And so I was talking about how I'm not a huge fan of a gold breakout right here because of the tighter liquidity that we're seeing. And I'm more interested in gold and silver when I'm seeing inflation signals. Like, you want to see the interest rates going up. You want to see like the helicopter money, the Treasury General account pumping money. You want to see the Fed balance sheet going up. But right now, gold's making a move without any of those things happening. So I don't really trust this breakout, even though technically this is a very, very good setup for a gold breakout. And this is what I said when it started to break out was the technical setup looks really good and it got support and it did break out. But I don't like I don't like the inflation or anything like that as far as kind of supporting a big gold move out. But this recent news with countries trying to get physical delivery and not being able to get it, like, that is going to make gold much more precious. Like, if people are trying to get the physical gold and they can't get it, like, people are going to start freaking out and trying to get delivery, and this could start a huge like run on physical gold. So we'll see if that develops, and that would be very bullish for gold if that does start happening. If we start getting runs on physical, like Bank of England can't deliver, and then we're like, well, how much physical gold is there even? Like, how many of these paper contracts are out? And then, yeah, it could be a mess. But this is a chart on paper contracts, very risky paper contracts from a scary bank that is, you know, probably being backstopped, but yeah, I don't know. So, I mean, as far as paper contracts on physical gold, I always look at the Sprott Physical Gold Trust. This is in Canada. The physical gold's in Canada. This is one-to-one contracts that have physical delivery, although it's probably a pain in the butt to actually get physical delivery. This has way less counterparty risk. It's just Sprott in Canada. There's not all these international crazy things going on between the West and the East and China and Hong Kong being overtaken and bankrupt international banks involved and all kinds of crazy stuff. Like, this is just delivery contracts from Canada, which is still paper gold. It's not physical, like, it's a paper contract, but um, yeah, different different one. And then the SLV is this is the JP Morgan silver. So JP Morgan has like more than half of the world's monetary silver themselves, which is nutty. And this is contracts for that gold in JP Morgan. So the political risk here is more domestic, and so I think the Sprott silver or the JP Morgan silver is probably okay without a bunch of crazy counterparty risk, but these are still paper contracts. And so silver may be setting up for a little breakout here. But silver needs good commodity conditions, and you need like the good conditions for gold plus good commodity conditions for silver to do well. And well, I think commodities are looking slightly better, but I'm not really seeing the inflationary indicators are not on yet. So I think this is still an early kind of time to get in if you're expecting big inflation soon. But right now, there's no indication that's happening. We really need to see which way the interest rates trade and see what the Fed kind of does in response to that. You have people like Raul Paul expecting the interest rates to break down and get into a deflationary scenario. And that would not be so good for silver, but should still be okay for gold. And then, like Peter Schiff and people like that are just like, hyperinflation is going to happen today. And so gold and silver would kill it in those environments. But um, none of it is happening right now. Like everything is just stalled out, and I've been calling it boring zone. Back on the S&P here, we're in between bull and bear territory. We're just kind of got this expanding volatility zone in here, just like blah 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 blah, and then we just failed to break out, and so blah 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 blah. This is just nothing. Nothing is set up. Um, but yeah, it is interesting to see gold like trying to break out with the current conditions. Like I think people are betting on high inflation soon, right now, and I want to see if there's kind of more and more runs on the physical supply. Yeah, so that's just kind of a look at the inflation kind of scenario. We don't really know. We're not getting indicators of where it's going yet. And there's all these contrasting macro theories, and none of them are really holding up. And this is crazy here. Like I mean, this whole bounce, like the beginner Robinhood traders have been absolutely destroying like all of the smart money hedge funds, Warren Buffett, like all of those guys have been losing money, most of them losing money or not making very much. And then, beginner Robinhood traders have just been buying whatever crazy stuff and making money this whole time, um, which is which is crazy. So we'll uh, we'll see if some of these macro theories start panning out here soon, because it looks like we may be starting to get some more reality as we're getting more solvency risk, more bankruptcies kind of coming in, and yeah, these collateral squeezes and the solvency stuff that's going on is serious, and it's being delayed. They're pushing off payments, but you can only do that stuff for so long. And yeah, and it doesn't really indicate which way the stock market is going to go. Because I mean, if you get into high inflation, the stock market could go way up, or if you get into deflation, it could go way down. And who knows if some international conflict or something like that goes on. So just high volatility, high uncertainty, high risk, and boring stuff. So we'll see. We'll see if the cash trading sets up anything today. Um, I mean, more likely a bearish setup is likely from where it is now, um, but yeah, we haven't seen a very good trade setup since this bounce off resistance down here. Um, this isn't quite a bounce because we broke through and didn't make it, and yeah, this isn't really a good trade setup yet. This hasn't really picked a direction or looked like it's doing anything specific yet. Let's get in a little closer. What's it looking like now? Yeah, it's just kind of wobbling underneath now. Yeah, so for now it's just this is slightly bearish, and that's about it. There's really not much going on as far as all the other signals are going. And that's about it for right now. I'll see if there's any other crazy news. Check out mmtgear.com if you want to get a t-shirt. I have some funny t-shirts in there. And yeah, happy trading.